how bullish or bearish are you, broadly speaking, right at this point?
Less bullish than normal. The new thing for tech investors, for growth investors this year is rising interest rates. And we're going to have, I don't know, 3 or 4, however many interest rates increases there are. This is the first time we're going to have had that in multiple years. And it means for high growth stocks where a lot of the value is in the future, that's going to create more headwinds. So what you've seen is that most tech stocks that trade at that price to sales multiple north of 10, year to date have corrected more than 10%. So you want to be super careful about the high multiple stocks going into this year. And that's a good chunk of NASDAQ. That's a challenge.
Okay, so if that's the broad thesis, you do have a couple of stocks you think embedded in there that are value plays. That may be a relative term as well.
Yeah, no, and it's a real term too. So I'll our top three picks for this year, and I also want a specific 2022 catalyst for each of these names, but we think we have them. Amazon, Facebook, and Uber. Amazon, really quickly, we had a massive investment cycle this last year. They've doubled their distribution center capacity. We think we'll start getting an R on that, a return on that investment in the back half of this year. Accelerating revenue growth, margin expansion, valuation is pretty consistent with where it is historical. So the stock hasn't overrated, and it's also been stagnant for about 18 months. So we think there's a kind of a reversion to the mean play on Amazon. Facebook, they've got two challenges here: fixing the Apple privacy targeting loss that occurred in the middle of this year, and also trying to address some of the ESG concerns that the company faces. I think both of those are at least addressable, maybe fixable. So I think that's the upside to the stock, and it's trading below its historical multiple. And then Uber's our big recovery play. Assuming that there is some sort of recovery coming out of COVID, chances are greater going into this year than they were going into last year. Uber is the stock that's most dislocated fundamentally, most below its pre-COVID demand levels. So that's the stock that we like the most as a recovery play. Those three stocks: Amazon, Facebook, Uber.
Just as a point of, I don't know if it's a clarification, Uber over Lyft for you? Why?
Well, it's more of a global asset. It's more diversified. It always has been. It's got the mobility and the delivery segment. And then they've also got this new membership program called Uber One. I think there's something really interesting going on here. They just soft launched this a month or two ago. I think it was in November. If this is something where I think you've almost got daily, weekly utility when you put together ride sharing and delivery. If they can create a Prime-like, Amazon Prime-like subscription offering, I mean, I think they've developed it. If it can gain that kind of traction, I think it can be an enormous win for the company. So that's kind of the one product I'm really watching out for, and that's the advantage that Uber has versus, say, a Lyft or a DoorDash.